Let me start with the conclusion. Tesla is no longer being valued as an EV company, and once you understand that, everything happening with the stock suddenly makes sense. Hi, this is Ken. Today, I want to help you understand a very real disconnect in the market. Tesla's EV sales in Europe are down nearly 40%. In any traditional framework, this should be bad news. Yet Wall Street isn't walking away. In fact, some analysts are becoming even more bullish. By the end of this video, you'll understand why Tesla can post weak EV numbers and still be evaluated in a completely different dimension. And more importantly, what long-term investors should actually be watching right now. First, let's ground ourselves in the facts. In 2025, Tesla's EV sales across Europe declined sharply. Competition intensified. Chinese manufacturers pushed aggressively into pricing. European legacy automakers finally woke up and started defending their home turf. If you only look at vehicle delivery numbers, it's easy to conclude that Tesla has peaked. But at the same time, something very different is happening in financial markets. Tesla continues to be discussed not as an auto stock, but as an AI and autonomy platform. This tells us one critical thing. The market's evaluation framework itself has changed, and that shift is the real story. The turning point was FSD version 14. Recently, the head of robotics at NVIDIA described Tesla's FSD V14 as something remarkable. He said, "It feels like an AI that has passed a physical Turing test." That's not marketing hype. That's not a Tesla fan talking. That's a world-class robotics expert acknowledging something fundamentally new. What makes FSD V14 different isn't that it drives better or safer in a measurable way. It's that when you sit in the passenger seat, you stop thinking about the fact that an AI is driving. That psychological shift is massive. Most autonomous systems today succeed in controlled environments. Geo-fenced cities, carefully mapped routes, predictable conditions. Waymo is impressive, but it operates in a managed world. Tesla is doing something entirely different. Tesla's AI must handle unprotected left turns, unpredictable human behavior, poor road markings, weather, glare, and chaos, all with a single general-purpose neural network. That's not incremental progress. That's a different category of problem solving. Here's where many people miss the bigger picture. Tesla isn't fighting this battle with software alone. A recent patent related to FSD camera glare reduction might sound boring at first glance, but it's actually critical. Most AI companies try to solve perception problems purely with data and algorithms. Tesla attacks the problem at the hardware level as well. By reducing physical noise before it reaches the neural network, Tesla increases reliability in the real world. AI, hardware, and mass production. Very few companies can do all three simultaneously. That combination is why Tesla is so hard to copy. This brings us to the investor perspective. When Tesla was evaluated as a car company, unit sales mattered most. Margins followed volume. Growth followed deliveries. But when Tesla is evaluated as an AI network, the equation changes entirely. The value isn't in how many cars are sold next quarter. It's in how many autonomous nodes exist in the network. Each vehicle becomes a data-generating, revenue-producing asset. Here's an unexpected detail that actually matters a lot. Recently, news broke that Tesla's Robotaxi service may include cleaning fees. Some people reacted negatively. They assumed this meant higher prices or worse user experience. I see it the opposite way. The moment you start discussing cleaning fees, billing rules, and damage policies, you're no longer running an experiment. You're designing an actual business. This signals that Robotaxi is moving from theory to operations. That's why firms like Canaccord Genuity raised Tesla's price target to $551. They aren't modeling next year's deliveries. They're modeling the emergence of a large-scale autonomous AI network. This is about transportation as a service, not vehicles as products. And once that network exists, scaling becomes exponential. So where does this leave long-term investors? Yes, EV sales are slowing in some regions, but that's only one layer of Tesla's value. Today, Tesla is being evaluated as the company that may own the world's most advanced real-world AI deployment, not a car company, a driving intelligence platform. So here's the real question I'll leave you with. Is Tesla still an automaker, or has it already become something closer to an AI infrastructure company? Your answer to that question will completely change how you view the stock. As of today, Tesla is trading around $485 with relatively muted short-term movement, but long-term stories don't show up in daily price action. If today's perspective helped you think differently about Tesla, I'd appreciate a like. I post daily analysis focused on long-term signals, not short-term noise. If you want to stay ahead of where Tesla is actually going, consider subscribing. Thanks for watching today, and let's continue enjoying life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.